Thursday, May 5th, 2022. Just wanted to check in with everybody this morning. It's very early. I've got to hit the road here in about an hour. So I wanted to get this video out before I hit the road. But right now, markets are not even open yet. But just looking at the futures, they are down about 160 points. Gold presently up $40, silver up 80 cents. And CNBC had an article breaking this morning. Worker output fell 7.5% in the first quarter of 2022, the biggest decline since 1947. At the same time, labor costs, get this, 11.6%, the fastest rise in 40 years. Weekly jobless claims increased to 200,000, well above the Wall Street estimate. So not the good news that we should be hearing, especially after the Dow Jones shoots up and explodes 932 points yesterday. And I was reading some of the comments. I was checking out some of the forums last night. People absolutely calling this a fraud, a giant Ponzi scheme, a joke. Nobody is believing these markets now. But what they are believing is the news today that worker output fell 7.5% and labor costs up 11.6%. And this means more inflation. We're producing less and paying more to do it. And it's going to cost people more money to go out and buy products. We're not making anything here in America. We're dependent on the entire world for cheap goods. And those cheap goods now are increasing in price. Just a couple things I noted last night. Again, people in complete disbelief in what happened in the markets yesterday. We'll see what happens yesterday. They're certainly not looking like we're going to see a 900 point increase in the Fed or in the Dow Jones today, but who knows? It's early. Markets haven't even opened. Fed Chair Powell is vowing that larger rate hikes are not on the table. And this, they are saying, is responsible for this massive increase yesterday. He said that inflation is not slowing down anytime soon. Powell knows a recession is coming, and now he's getting very concerned about being too aggressive and bringing aggressive rate hikes to these markets. Yet, what he is doing, in my opinion, is throwing gas on the fire by not being aggressive. He looks scared, and I really thought he would be more aggressive than he is, and it's very, very disappointing. Many people out there are very right that this Fed may not be as aggressive as I thought, but 50 basis points I thought would be enough to rattle these markets. We'll see if they digest it today and what these markets do, but he's sending a very, very bad message, and he really is pouring gas on the fire that things are so bad that he cannot be as aggressive as he should be. What he is doing is extremely dangerous. As right now, we are witnessing the smart money out of this market. It's been out of this market. They don't trust the Fed. And I don't think it's going to take a whole lot. 50 basis points here, 25 basis points there, I think is all it's going to take to really upset these markets. And again, we'll see if there's any kind of pullback today as the markets have time to digest this 50 basis point rate hike, which is the biggest rate hike in 20 years. Someone said, so who's to say the Fed didn't just buy the indexes? I read this on a forum last night. Who's to say the Fed just didn't buy the indexes yesterday? They bail out banks, they bail out corporations, insurers, they buy mortgage-backed securities. So why not buy it all? Who knows? Who knows? This is where we're at today, ladies and gentlemen. Nobody trusts what's going on, but people are just saying, hey, go along with it or don't go along with it at all. But they don't understand that by playing this Ponzi scheme, everybody's going to get hurt. Increasing rates, to be clear, means it costs corporations more to borrow money and finance. Yet stocks skyrocket yesterday. I just wanted to point that out. I noted this yesterday. By increasing rates, just by that 50 basis points, corporations are going to pay more to borrow money. You are going to pay more to borrow money. It is going to cost more to service debt, ladies and gentlemen, and we have a lot of debt. 50 basis points on $31 trillion, it's a lot. Something, no doubt, is very wrong. It's totally visible, in my opinion, ladies and gentlemen, that these markets are rigged. that this is a massive Ponzi scheme. And again, people may say play or get out, but they don't realize that all Ponzi schemes come to an end. All Ponzi schemes fail. And when they do, there's a big problem. Everybody is going to pay for this massive Ponzi scheme collapse, this fraud, these rigged markets, this manipulation. People don't understand what is being sacrificed for this melt up right now, but they will when it becomes a meltdown. And that day of reckoning is coming. And when it does, pensions, stock market, 401ks, housing, all of it is going to melt down. It will be the largest wealth destruction planet Earth has ever seen. And that is just clearly a fact in my opinion, ladies and gentlemen. CNBC, I was reading this last night, more Americans than ever say it's not a good time to buy a home. Well, boy, you would think that Dow Jones up 932 points, the strongest economy, consumer strength, yada, 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 that this would be a great time to buy a house. But we see productivity down. We see jobless claims up this morning. I mean, they can't hide this stuff anymore. More Americans, again, say that this is not a good time to buy a home. Just 30% of adults surveyed by Gallup said now is a good time to buy a home. These people must be real estate agents, but it is down 23 percentage points from a year ago. This is the first time the share has been below 50% since this survey began in 1978, yet markets up yesterday. See how they do today. It'd be very, very interesting. And I'm shooting this video very, very early, sun just coming up. Markets haven't even opened yet. We'll see what happens. Another article from CNBC. Consumers at breaking point as Fed's inflation battle heats up. Investor Peter Boockvar warns. This was very interesting. He warns the Federal Reserve will not be able to meaningfully contain surging inflation, and there's not much more consumers can withstand. So somebody's wrong here. Every time I'm watching the television, I'm watching these financial channels, the consumer's strong, the economy's strong, it's just a hot economy. Somebody's very wrong here, and I think it's most of these channels on the television. Consumers have big trouble. Rising credit balances and delinquency rates, reports TransUnion. Another problem, another sign of the problem here, that it's going to be very, very difficult to hide. They can manipulate the stock market by buying treasuries and buying securities and buying equities and buying stocks and God knows what. But they're going to have a very, very hard time manipulating this economy as people are not working, as we're not producing anything, as inflation is just ripping apart anybody's savings, anyone's purchasing power. This is getting out of control. They can't hide it. They're going to have a tougher time hiding it, and all they're doing is pouring more gas on the fire. Boockvar continues to say this: the consumer is going to call a timeout on spending because of the continued rise in prices. We are at a breaking point, Boockvar says. Boockvar expects the bounce that we saw yesterday to evaporate. He says, I do not see a soft landing. Comment down below. Do you see a soft landing? I see a crash landing. There's no way we avoid a crash landing, ladies and gentlemen. So I just wanted to check in with all of you before I hit the road. We're going to be heading up inland, north, leaving the beautiful Gulf shore here on Alabama, this beautiful resort, the lodge, absolutely gorgeous. Sun has just come up, and it's just a beautiful, beautiful day. And I will be heading up north, looking at some small farms, some ranches, talking to some realtors up there, and we're just kind of gauging and getting a temperature check of what's happening in the state of Alabama. I don't know where I'm moving yet. I don't know when I'm moving. I'm gonna wait to see what happens to this real estate bubble. I think we're beginning to see a correction take place right now, but this is just the beginning. Where will I land up? I don't know. Could be Texas, could be Kentucky, could be Alabama, could be right here at the Gulf Shores. I don't know. Could be Tennessee, could be Florida. I don't know. But right now, what I do know is I have to get out of California. I have to be looking. I have to be talking to real estate agents in these different states, and I have to be looking at all options. And I also have to really be carefully watching these markets, watching what the real estate market is doing, because I'm not buying anything at full price. I'm certainly not buying in a bubble. I'm not paying these market prices right now. This correction has begun. It is going to accelerate. We are going to see, I truly believe, a real estate crash in America. And so I'm keeping my powder dry. I'm saving up some cash. I'm going to continue to buy assets. Gold up over $40 this morning as I make this video. Silver up 80 cents. Dow futures down. We'll see what the day has in store for us and what happens. It'll be very, very interesting. So I'm going to leave it there today. Thanks for all the support and prayers, all the letters, all the positive thoughts and wishes, and thank you for all the great comments down below. God bless all of you. Please like this video, make sure to subscribe, share these videos with everyone, hit that bell notification down below, and of course I will be taking the cameras with me so that you can see what's going on out here in Alabama, and I'll be shooting some of the landscape, possibly some of the farmland, whatever I can shoot, whatever I have time to do. I have a limited time here. I'm only here for a week, so it's amazing how fast time flies, especially when you have so much to do. God bless you all. Talk soon.